Hi everyone, welcome back to my channel. Today I want to share something that a lot of my friends actually ask me. Actually, the question is, would you want to pay off your mortgage or will you want to invest today? I think this is a common thing that most of us will have, and I hope that this deck of slides that I prepared for you will be helpful for you. Okay, so let me do a screen share over here. Okay, so you probably can see my screen over here. So this is the question that let's ask ourselves. Will you today, be paying off your mortgage or invest today? So there are actually three scenarios that I want you to consider at this moment. Okay, so scenario number one is pay off mortgage fastest, means the shortest period, and then after that start investing. Okay. Option number two, pay off your mortgage the minimum and at the same time invest. Okay, that's the second option. Then the third one is pay off mortgage faster than option number two and invest a small amount of money and then subsequently start investing after you have paid off your property. Okay, so at this moment I'm going to pause. Okay, so what do you think? Option number one, number two, number three, which one do you think that will create a potentially higher portfolio for you? What do you think? Do comment below if you are watching this video. And I mean, if this is the first time that you watch this video, do support me in my journey to really educate people in the financial literacy. Do like and share the video, and especially do subscribe to the channel so that for new videos that come on, you will actually receive them. Okay, so let's go into stating the scenario over here. So assuming you are going to invest the minimum, right? We are looking at a 450,000 home mortgage. So basically, in our own scenario in Singapore, you are buying a HDB probably worth about 500 over thousand, because currently the down payment for HDB loans will be about 15%, right? You probably need 15% to do a down payment. And I think a 530,000 plus HDB in our current market is quite realistic. Of course, all these numbers is only pertaining to this assumption, right? You will be borrowing money at the interest rate that HDB loan give you, which is 2.6% for the next 25 years, which is the maximum loan amount that HDB can lend you. Okay, and the monthly mortgage will be over there, about $2,041 every month for the next 25 years to pay off the property. Okay, that's the scenario, and that is the maximum period of time you will be either investing or paying off your mortgage. Okay, so let's look at option number one, pay off mortgage the fastest and then invest after that, in a sense. So what will be the fastest period of paying off? So based on this example, we are still using 450,000 home mortgage at the interest of 2.6%. However, you will be paying off the mortgage at 15-year time, okay, which is, I think, something that most people would like to have, to really pay off their property in 15 years or even year 20. Okay, because most people want to pay off their property and live a debt-free life. And so these are the numbers. Okay, the mortgage for 15 years will be about close to $3,021. Okay, then after 15 years paying off your debt, paying off your mortgage, then the next 10 years, you will be investing this $3,000 into the stock market, right? And the potential return, okay, based on a 10% annualized return, which is something that S&P have been doing over the last 100 years, right? Your portfolio will potentially grow to about 600 over 1,000. Like I say, the numbers will change because of the scenario that you want to put in play. But this is a scenario that I feel that it is quite realistic for most people. If you want to have this calculation done for you, you can actually DM me. Okay. Okay, scenario number two. Okay, pay the minimum. Paying the minimum means what? Means likewise 450,000 mortgage for the next 25 years. Okay. Remember the first example over there, right? If you pay 15 years, which is 10 years earlier than this scenario, the highest mortgage amount monthly you need to actually put in is about 3,000, right? So what it means is very simple. For 25 years, the mortgage will be about 2,041, which means 3,000 minus 2,000, there will be a 1,000 that you can use for investment for the same period of the next 25 years. Okay, so you will do both. Means while you clear off your debt, you will start investing. Okay, then you'll see that the growth that you have after 25 years is about 1.2 million. Can you imagine the number? Okay, comparing to the first scenario, the difference is about 600,000. Okay, anyway, this is the mathematics behind this. And I personally actually use this when I was having a mortgage myself. And I feel that this is personally is quite realistic. Why? $1,000 mortgage from each of you, I mean the husband and wife, I think is pretty realistic in a sense on a monthly basis. Okay. Then the third scenario, okay, the third scenario is like a hybrid in a sense. What do I mean by hybrid? So likewise, the assumption here is saying 450,000 at 2.6% interest. Instead of 15 years, we will be using 17 years. Right? Why? Because we want to pay off the property fast, but not the fastest comparing to the first option. So what happened over here is 17 years. So 17-year mortgage, the mortgage amount will be about 2,007. So like I said, if you use 15 years, the mortgage that you will be paying is about 3,000, right? 3,000 mortgage, which means 2,000 for this scenario, 2,007 will be paying to the mortgage. You will actually have $300 extra for investment, right? For the next 17 years. Then after 17 years is done, remember our scenario, 25 years, right? So you will be investing the full $3,000 over the next 8 years, right? So it means technically, first 17 years, you will be investing $300 a month. Okay, you will have a delay of 2 years to pay off your debt, and subsequently, the next 8 years you'll be investing 3,000 a year. Okay, for the next 8 years, and the potential growth is actually about 760,000 around there. So do you see that option number 3, okay? You are still losing out close to $500,000 comparing to option number 2, right? But of course, this is the math behind these 3 options. I'm not too sure which one will you take for yourself. Do comment and let me know. If you need me to do a calculation for you, do let me know. I'll probably do a calculation for you. Okay, to me, a few things that we need to understand. In today's environment, this is more doable than during my time, comparing to my time. Why? Interest rate is lower now. Okay, I'm using an interest rate that is from the HDB loan. But if you use a bank loan, right, the interest will be lower. So which means there could be more money that is being deployed into your investment. Okay, so I'm going to give you a snapshot of all the number over here. Remember these three options over here. So the first one, 600,000 if you invest the remaining years. The second one, you invest the same period of time that you pay off your mortgage, which is 25 years. You see it's 1.2 million. Then the third one is a hybrid version, it's about 760,000. So choose your color. Are you in the red team, green team, or the yellow team? I'm not too sure. Okay, so like I said, a few things, the math over here might confuse you, but you need to understand that option 2 is potentially much better. Why? You do not have debt, and you have at the end of your 25 years, right? You actually have 1.2 million. Right? The reality over here is most people want to have a property because they want to have $1 million, right? So that they can pay rental from, right? But having this option number 2 allows you to do it today, because if you own a second property today, right, the buyer stamp duty is pretty high in a way. But of course, aside the math behind this consideration, right, the number one thing which I feel is, how do you feel when you have more debt? How do you feel if your debt is paid at a later period, right? I think this is the question that you need to ask yourself when you are considering which option to take. If you're okay with option number 1, be it. Okay, because remember one thing, in regards to investment, right, it is always understanding the risk that you can be taking, and secondly, the risk that you can tolerate also, right? So At this point, I just want you to remember it is not just the math behind it. Of course, the math helps us. Why? It helps us to make rational decisions when it comes to financial decisions. The emotion is just a part of our fabric because we are human beings. So to me, is do remember the emotional aspect when you are making financial decision. If you need my help, I will be there for you. So this is the end of the video. Thank you for your time. Do follow me in the channel. Do subscribe to my channel, and I hope to see you soon. Okay, bye.